learned on the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel that's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, ladies and gentlemen, I got your watch list coming in on February 14th, 2022, and the stock market is gonna go crazy tomorrow. And I got one stock that I'm buying. It is going to be a crazy week. We got a bunch of catalysts. You're getting the minutes. You still got earnings, but now the tensions over the weekend, even what happened on Friday and what it led into, there is a lot of different plays, and it's leading to some defensives and energy. And honestly, it was a very wild move. And by the end of this week, we are going to see how volatile it will be. So we got a lot to talk about. I'm going to go over everything. There is a bunch of stuff we need to cover. You need to also post your Super Bowl play. I mean, who's going to win? And we need you to post the random play, baby. Don't forget the random comment picker in the morning. Post a strike price expiration day. Any option trade, keep it below $100, and we're going to test the performance. But I do got a bunch of different plays. We'll go over the puts that I bought on Friday. I will explain the reasoning. But like I said, with everything that we're going to be getting this week, there will be defensive plays. And then after the minutes, well, anything could happen, and it's going to be crazy. So right off the bat, drop your thumbs up on the video if you find it helpful. And we'll see you there in the morning. YouTube.com/thestockmarket. It's going to be another exciting week, and big shout out to everybody holding it down, baby. God bless you. We love you. But as far as this week, it is going to be volatile. Make no mistake. Even right now, looking at Asia and all of that, it's getting off to a bumpy start. We even have a lot of data overseas, but like we've been talking about, the Fed minutes will be the big catalyst Wednesday. So on Wednesday, we're going to get to see a little bit more insight into the last Fed meeting. And if you remember, it caused some volatility, but it was kind of dovish. That is when Powell left it up to the markets to decide. So with everything, even the rumors that we got on Friday, again, you're going to hear me talk about this a lot. This is the crash indicator. Literally, if you go look up the video that we posted a couple days ago, it's called the crash indicator of 2022. This is the divergence we're talking about. This is what is going to be important. But essentially here after the Fed, whatever the Fed futures do, and especially with the reaction we got on Friday, this is going to be the major key. So come Wednesday, we're probably going to see big moves, but now you saw it on Friday and it kind of correlated. This is what we talked about a lot on Friday. Essentially, the movement on the bonds and the Fed futures, it actually started moving down a lot sooner than the whole Ukraine thing, but we did get a little bit of panic about this on Friday, and this is really going to be key. And this is where I'm going to have to skip ahead here to the pretty picture, but what this chart is showing you, this is a chart of oil volatility, and literally you're getting more weekly oil volatility than when Omicron first came out. And remember, that had a huge effect on oil, but now the difference is this time around oil is going up. And why this relates to the Ukraine situation, literally since Friday, it sent the defense names up. That's the one play that I'm going to be talking about, but then it sent oil names up, then it sent gold up, and then finally a lot of safe haven currencies, they also started running too. So essentially, and we'll get to the news here over the weekend, but it is a little bit more hype now with the Ukraine stuff, or a little bit more worrisome. I don't know if hype is the right word, but essentially this is going to be a big driver this week, as well as now the final set of earnings. You're still going to get NVIDIA, Walmart, John Deere, Snapchat, or not Snapchat, Roblox, Airbnb, and a bunch of others. So you're still going to have those kind of beneath the surface, but we do have a lot of other data. There is big things happening now overseas in those tensions. And then finally, the Fed, the divergence in expectations, that will be the big thing. So before we get into the final part for this week, another pretty picture, and I mean, it highlights the tensions. Again, we've talked about this a lot, but you will definitely see this impact the market. People are already bringing up these maps and talking about it lot more. So this was from Bloomberg. You're getting a lot of discussion now, and I really think we are going to get a lot more headlines here, especially as the Olympics wraps up. But if you were seeing on Friday, it was big, and now where the market is, there's just a lot of big things converging at once. And remember, we got a back-to-back bad news last week, and it did lead to a big effect. So keep that in mind. But as far as everything else for the rest of the week, you're going to get retail sales. You'll be getting producer inflation numbers and also housing data. And then the final set of 13Fs, we've kind of been getting them. They haven't really moved the market, but the final bank filings or anybody owning $100 million of stock, that should be coming in here, I think, in the next couple days. So watch out for that and anything else. And like we talked about, the key for the minutes here, again, we're going to be documenting this every single day and be watching out for it. But essentially, we need to see if the market reads the minutes as more hawkish than they are already pricing in. So essentially, even on Friday, this is something we talked about. And then as the market started to slip, again, this has acted as a leading indicator. As the market started to slip on Friday, you probably noticed the bonds started to kind of come up throughout the day. So that was an instance of the market kind of catching up to what the market priced in, and then the market not pricing it in further. So we're definitely going to be keeping an eye out for that. And then finally, unless we hear about it tonight, this was the big news there on Friday. It does not look like we will be getting emergency cut. If you lost a bit, I will see you in the morning, but we still got to watch the Fed futures and see if any Fed pricing expectations change this week, especially after we get the data. But coming into the company news and events, the first piece of news, this has to do with Russia, and really it is heading into the most tense week since all of it started. But there was a call between Biden and Putin on Saturday. It did not produce any breakthroughs. Putin even said that America wasn't having their commitments. Again, you saw the map there. It looks like it is escalating a lot more. So we're going to see what happens with that. Definitely by the morning or throughout the day tomorrow, we should be getting some updates, and then we will see how the market interprets it with everything else. But that was the first piece of news. And then the second one now, straight from the Fed, there was like a CBS like Face the Nation thing, but Fed Dolly, she was on there, and she said that the rate increase path is going to be data dependent and measured. And she said, a quote, any abrupt and aggressive moves would be destabilizing. So she still does favor a hike in March and kind of see where things go. But again, a lot of the talks that we had with that emergency rate cut, it was crazy. Again, on Friday, even Bloomberg, a lot of the media outlets, they reached out to the Fed to confirm it, and you even got more statements. So this over the weekend should reassure some things. We'll see how it plays out there, and we'll watch what this does to the Fed futures. But that was big news here over the weekend. And then Fed Manchin, this one is interesting, and this one is not a joke, but he has pressured the Fed over the weekend, and he said that the Fed needs to stop, quote, pussyfooting around and tackle inflation head on. I know you guys wouldn't believe me. I mean, this is a real quote. Literally, he put it out in a tweet. He said he added the Fed. It says, stop pussyfooting around and tackle inflation head on. So Manchin, same guy. He was the one not backing the Build Back Better bill. Looks like he's coming after Powell now. So that one was very interesting. And then finally, it looks like the Canada Bridge, the Ambassador Bridge, it will be reopening here today after the protesters have been cleared. So we'll see if there's any more updates on it. They said it costed about like $13 million or $30 million an hour that they were protesting in terms of trade stop. So looks like it's cleared up. We'll see what happens coming into tomorrow, and then we'll see who wins the Super Bowl. But very straightforward week. Do not underestimate the volatility and back and forth we are going to get. There is a lot of unknown with the global tensions. The minutes have been very, very important last time, and if it does get towards any wave 3 or a bounce mode, there is going to be a lot of reactions. So I hope you're ready. But that is pretty much it. So let us get into the plays. So right off the bat, I got 3 different stacks that I'm looking at coming in tomorrow. Surprisingly, they're all calls, but I did make a couple of put plays over the last week. We'll go over those, and I'll even talk about my reasoning here a little bit with the divergence. But the first 2 plays I'm looking at, they're going to be earning plays. But that one stock I'm going to be looking for, I'm going to start here at the end, HII. This is a defensive name. So on Friday, we were watching all the Ukraine stuff. The market started dropping, but if you notice, Lockheed Martin, they started going up, and then a bunch of others, surprisingly, some of them did drop, like even Boeing, they sold off, but one of them that went up, and they even went up last time we got some of the headlines, it was HII. I made a very, very quick play on it we ended up snaking the chain, but that's why I like this one. This is why I'm calling it out. We'll see what happens with it tomorrow, but this one is just a very non-crowded name. It's a lot less crowded than like Lockheed Martin and all those. I would keep an eye out for LMT and all of that, but I want to see how long this kind of fear or global tensions keep these going up, because if there is bad news, everything may start to sell off. We'll see again in conjunction with all the catalysts that we have, but this is definitely the big one that I am going to be watching this week, because it may be able to perform despite what happens with the Fed. So that is the first play. As far as the play, I grabbed this one right as the news came out, or even a little bit later. Literally Lockheed and all of them were up, and then pretty much HII, they started going up, but the options were pretty much dead. Again, it's just not really a defensive name. They make boats, again, like U-boats and crazy stuff like that, but wasn't really crowded. I decided to go for it. I saw one option, the 220s for this week, February 18th, so very, very risky. I'll probably make another play on this, or even another defensive name, depending what we see by the end of the week, but I grabbed the 220s. I grabbed 20 of them for 5 cents each, so I spent $100. They went up to 20 cents, even it's at 20 on the bid. Sold out 10 of them at 20 cents, made it free, and then I'm holding the final set of these. But like I said, the reasoning has to do with the global tensions. We are definitely going to be watching this one, but that is the first play. Coming into the second play and jumping to the top now, Airbnb. We have those old plays, and they surprisingly held up. Remember, we got these at the beginning of the week before Expedia earnings, so even after Friday, those plays are still up 50%. So in a weird way, Airbnb has already kind of had the pre-earnings run up. So I need the market to feel good about this. That's the thing with both of these plays. If there's a lot of market volatility, it may clap it, but I am going to be watching out for the earnings IV. There could be a pre-earnings run up, but at the very least, there will be a couple plays that I will be holding for Airbnb this week. So again, they have earnings. We already got our plays, but I will be watching out tomorrow, because if they do get cheaper, there might be opportunities to trade it. But as you've seen with Airbnb, it needs to hold up that momentum. So really just watch how it performs relative to the market. But that is the second play. And then finally, Walmart. I really think this one could be a sleeper for earnings. So again, it really does depend on the market, but they are reporting this week. We had some of those earlier plays, if you remember, and we flipped them. So I think after all the time decay and how they held up, they are a lot cheaper. So that's why I'm thinking this one could be a sleeper. I am definitely going to be eyeing some plays for this one next week. But those are the main plays. As far as everything else, I want to go over the puts that I got on Friday. I'm still holding the Teslas and the Fords. I did take profit on one of the Teslas as well as a Facebook, and even then, I will be eyeing the Facebooks. But one thing I want to talk about now is the Divergence. So I grabbed the IWM play, and really, if you were watching there on stream, you could really watch it in real time. We were talking about it before the market fell out. I grabbed these in the morning on Friday, and really, what we've been talking about is this Divergence needs to close. Essentially, bonds are going to recover, or the S&P is going to come down, and that's why the catalyst and everything we have this week, it's pretty much going to fuel this. So realistically, even with all of the Fed pricing in and then the Fed meeting, even though the minutes will be important, I will tell you this now, we're definitely going to talk about this tomorrow, so I'm going to know who watched the watch list when we say this, but essentially we have about 30 days for this Divergence to either close, converge, widen, whatever, but pretty much you could put a clock on it, and that clock literally is the next Fed meeting. So that's going to be the tricky part about this, and this is really what I'm going for with some of these puts. But now this is something I talked about, because a lot of people have been asking me. They said, hey, is TLT going to be the play? We've hit a lot of TLT plays, and we've discussed it, and yes, bonds will be important, and there could be an opportunity there. We got those TBTs. Those are starting to go up, but the thing is, since we're looking and we see this big Divergence here, you could miss the bond move, and essentially if the bonds go lower, that will widen the Divergence, and usually the other one that's lagging will have no other choice to catch up, or it could influence that. And again, anything could happen. It doesn't always have to play out like that, but essentially what I've been saying is that even if you miss a move on bonds or TLT, TLT, that would still give you the confirmation and signal to play more of the S&P in that divergence. Now, why is this important? Because here's the overlay and divergence between SPY and TLT. So this is what I'm going to show you with the IWM, because I said I'm kind of early with it, and look at it when you overlay IWM in a weird way. IWM kind of even led the bonds, and then the bonds caught up. So essentially, IWM is like a cheaper way to play TLT, and then that's why I say I'm early, because even if I'm wrong on this one and we see what happens from there, it should create the opportunity there between the SPY and the bonds. So some of this may be confusing. If you haven't been watching around, again, I encourage you to go watch our old videos. You could go literally look it up from last week, the crash indicator of 2022, and you'll see the bond indicator, the Fed futures, this chart and this analysis we've been going over. It really has been a leading indicator. Again, this is something that we've been talking about, how really the market's still back up at this February point where this has been leading the way, and before all of this fear with the Fed, this thing was just way ahead. So that's what we're going with it. So that's why I decided to go with the IWM, but I still do think we have about 30 days before any move. So keep that in mind, as there will probably be a lot more plays both ways. But even for any downside or divergence play, we are really going to have to snipe it there. So I started with this one. It worked out on Friday. I thought I was early. I grabbed 10 of the March 174 puts for like $1.10. They went up like 80%. At one point, they closed up about like 50%. But now I went with the 174 because the next contract is the 170s. And this is where they start going down now by $5 at a time, where these ones are the $1 at a time. So until they add to the chain, these ones might be a little bit better if you remember that last lesson. And then I had the 155s. I grabbed those, I think, at the beginning of the week on the 4th, a little bit earlier, and I kept those a lot smaller. So I spent $1,000 on the new puts. I spent like $500 on these ones at first, but I'm down on them. So I'm still down about like 20% since some of the earlier volatility that we got. So now these are coming back, but holding those along with the Teslas and all of that. But that was the only other big play. I sold out of the Teslas, like we said, still holding the Ford and all of that, but I'm going to be watching NVIDIA as well this week. They have earnings. We'll see. There could be a lot of hype, but really recently chip makers have been getting clobbered on a daily basis. So we're going to watch out for that. Airbnb, like we said, again, Ford and Tesla. We'll see if even if the protest stuff could end up being good news, but I'd watch both of them, especially Tesla here. The premiums did go crazy, so we'll see how it is, but some of the premiums are cheaper from earnings. And remember, if they break some of those earnings level, that could be key. And then speaking of earnings, don't forget about the continuations. I still got those plays on Disney. I'm still kind of optimistic about it, so watch out for them. Even Snapchat and Uber as well. Even Uber sold off, so watch for these post-earnings continuation moves. I think these could be good. Again, there will be a lot of catalysts, but the post-earnings usually have been good, so we'll see if anything breaks away. And then speaking of breaking away, XOM, oil, definitely watch this with all of the global tensions. Again, we've been watching a weird safe haven move. Gold, dollar, oil, anything you could really think of, even the Swiss franc. So people are kind of worried a little bit more than they have been, and that's being reflected here through some of these assets this time around with the whole Ukraine thing. So watch out for that. Roblo, they have earnings as well. Going to be watching them. Facebook, even on the downside. I still have the June plays. We hit 100% flip on Friday. I wanted to go after them. We've talked about them. I'm worried about them kind of being oversold, but they are now below some key levels. So I would watch out for them, and then watch out for banks too. We had those plays. They're coming down now a little bit, but watch after the FOMC minutes. I'm sure we will get a pretty big move on any of the banks. So watch out for that. TLT and the dollar. All you got to do is watch out for the divergence. See if TLT goes any lower, because again, this is lower than 2021 when we had the first freak out. So this could cause a lot of things. If it does even go here and below here without affecting the market, that would widen the divergence out even more, and it may create more opportunity. But all we need to do is see, what do the Fed futures do? They're most likely going to lead the way, and all we got to do is respond. So I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure Hydrate Healthy ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shot. I need you to remember, be careful what you repeat, baby. But the code loves you. I love you. I will see you in the morning. Let's go.